All right, guys, I am back again with another video. And in this video, we just want to take a look at 5 trade setups that we called out during our live webinar session. So what we have is a members live webinar session for members every Sunday with the Forex market when the market opens up. And we like to look at the market and see if there's any current or upcoming trade opportunities. And we happen to sniff out 5 opportunities in this video. So you're going to see those 5 opportunities. Total 4 of those opportunities netted over a 1,000 pip profit, and the last one, well, you'll have to watch and see. All right, so I'm about to show you right now, so just stay tuned because here we go. All right, guys, before I get started, I'd just like to take a moment to really acknowledge all the things that are going on in this country, in this world. We have so many negative things happen right now, being divided, and the whole country is basically being divided. We have protests every night. I mean, we have this COVID virus that we're fighting. Our country seems to be getting farther and farther apart. People seem to be getting farther apart from each other. We don't have any love for each other like we used to back in the days. So I want to just talk about real quick Galatians 3:28. There is neither Jew nor Greek. There is neither slave nor free. There is no male and no female, for we are all one in Christ. So I just wanted to say that because this is a time where our country and we all need to just pull together and come together as one. We need to start loving each other as brother and sister, no matter the color, no matter the race, no matter what the issue is or what the person is like as far as differences. We still need to love each other as brothers and sisters. And that's the only way our world's going to change. So until we can do that and start putting our hope and faith in God, we're going to see this country deteriorate even further. Okay, so just wanted to take time to mention that to you guys and just pray that you guys are all right now. And again, thank you for being members. God bless. All right, guys, so looking at our first trade, it was the Aussie versus the yen. You could see here, so we basically had our buy stop level, which was going to be, we had a buy stop order with our entry level, which was going to be 70.817. Take profit was 72.518, and then the stop loss was 69.741. So basically, what we do when we're having our session, as the trades come up, I'm posting them, and these trades did not happen that day. So it's like I'm not posting the trade after the fact. We're posting the trade a day before the trade even triggers. So let's look at what happened with the Aussie yen. All right, guys, so we're looking at the Aussie yen. Currently, you could see basically the Aussie yen's been on a pretty good move, but where we got into our trade was, this was the candle where we were. So our session was on the 24th, 25th, whatever. And let me take you back to where we were, because basically this candle had not finished yet. And this was the candle we were looking at. All right, so we're going to go from this point discussing this. So what we looked at was, we have our zone here. This was our zone where we were looking for the trade, but also at our zone we had a rejection candle. So with that rejection candle, we had our entry set above the high of that rejection candle. Now, I called this one on Sunday when the market opened, but Monday could have been a better entry for us. So our entry level was 70817 with a stop loss at 69741, and then we could have gotten into a better trade the next day because we could have moved our entry from here down to here, but I didn't send this out in time. And then the next thing you know, we did get triggered. All right, so our take profit target was 72518. the market dropped back here. This is where a lot of our guys got out of the trade, because basically you made profit and then the market came all the way back. Now there's a couple things with that you could learn to do. Basically, depending on how many lots you were trading with, you could split your lots and then take some profit and let the rest run. But also trading the way that we trade, we know where the market pretty much may retrace back to. So we should have expected the market to pretty much come close to where our entry level was, and it came really right down to our entry level. Then the next thing you could see, the market started moving a little bit higher, and then the market went through our take profit level. Now I suggest that guys don't take your profit or set this profit level unless you're pretty sure you're not going to be around or be able to get a chance to take yourself out of the trade to take all of your profit. What I suggest you do is, when the market gets to this level, I like to put an alert just before that level. So I might put an alert like somewhere in here, and then I want to watch the market at that point. I want to see what kind of candle the market gives me, because basically if that market gives me a candle, basically if it gives me an indecision candle or something like that, a rejection candle, then I know I might take all of my profit here. But if the market gives me a strong bull candle like this, why would I take all my profit here? I could probably take some off the table or just let this thing run. Now, you don't want to take your profit there because you still had a lot of strength in the market. Now, when we watch what happened here the rest of the way, you can see where we are, right? So basically from where we got into our trade, pretty much about 400 pip trade right now. Looking at a 400 pip trade that we called before the trade ever took off. And you might not see me making a lot of calls here on YouTube, but I do make calls for members of my website, and we're posting them into our chat room pretty much. All right, so that was the Aussie US dollar. All right, so let me show you what we were talking about during this session. You could go back and watch exactly what I talked about during the session. Probably cut it up a little bit, but you'll see mostly what we were talking about, and then we'll go to the next pair after that. So watch this, what we were talking about for the Aussie yen. So what I'm looking at is this. We're breaking bull fractals. We haven't broken a bear fractal yet. Not a lot of divergence. We haven't reached the real level, true level that I'm concerned about as far as resistance points. So we could still see the market move. Let's put Ichimoku on here real quick. And we're bullish. Now we got volatility, a lot of volatility, so we may not be going much higher. Let me take this off. I'm looking at this right here. I'm going to set this straight up. Now, here's what I'm talking about. Let me put this back. I could do this. I'm getting ready to show you a trade off of a fractal bounce. All right. Now, Williams Personar gave me a trade. If I'm looking at this indicator for volatility, when volatility decreases, we're having this move. So you could see that I would be entering Williams Personar right here, right there. We would have entered long here. I'm pretty much back at that level, and our stop loss would have been here. As the days went on, I'm pretty much getting ready to enter at the same spot with a stop loss at this point. I'm going to open this trade up like this. At this point, I would be looking for a long right here. Now, I originally would put my stop loss right here. This is how I would do this. All right, I don't have a true target level yet because the market's starting to flatten out a little, and my 1, 2, 3, my 2 level is like right at my entry point. So I need to see the market continue higher. Maybe to the next level of resistance would be, let me see where it is. I'm going to probably try to set this up, and then I probably would see it go here at least. All right, so here's my next level maybe. So I'm looking at the market bouncing here, moving to that point. But also, if I can't figure out where my levels are, what do? if I can't figure out where to take the trade, I mean where to take my profit, what do I do, guys? You guys know. So this trade here would have been 1, 2, 3, 1 to 1, right smack dab on it, because you got an N wave, and you hit that target smack dab on it, right? So why don't we just do the same thing? Now we're gonna go from here to there, this top to this level currently, which would mean our target would be right here. So see, now we have a tool that shows us our target at at 72.518 if we take this trade here. Now we may get a better entry on the trade. So currently this is the entry, but this is telling me my stop loss is here. I normally would put my stop loss here. Let's use what they're saying. Huge stop loss, but guys, we're starting there only, okay? Doesn't mean we're going to take that level, because if we get triggered, then the market closes below this level. Exit your trade. Don't wait for it to come back here. On a 1 hour time frame, I may wait for it to come there because I know my stop loss is probably only going to be 30 pips. You understand? So I'm giving the trade a chance to still go based on volatility. Everything understood here? So with this trade right now, I think I would start it out here. We're going to do it here based off of using the volatility, but there's no way I'm going to let it close below here and stay in the trade. All right, so to me, this really does not do much for me as far as the stop loss. I don't really love it for stop loss on a daily time frame because I don't want to have that big of a stop loss, probably over 200 pips or so. Let's see what it is exactly. If I entered the market there, I'm going to be looking at about, 293, right? 283. There's no way I'm going to let that happen to me. I don't need to know that far. What I need to know, if I get triggered here and it closes below this level where my support was, the trade's no good. All right. So to me, basically, my stop loss is here. Sorry, I'm going to move this up. Is here and not here. This is just telling me the market is a buy market based off of volatility. All right. So therefore, I'm still using my levels as my stop loss. I'm going to set this trade up. So we're going to enter the trade at, what's that, 70817. We're going to have a stop loss at roughly a little lower there. So it's going to be 69741 with a target at 72518. Let's put this in the trade setup. Let's mark this one. And then I'll expand on it a little more. But I want to just mark it while we have it. So let's mark it. The symbol, Aussie yen. The entry is going to be 70817. I'll show it to you when I'm done, guys. 70.817. Take profit's going to be, what we say, 72518. Stop loss is going to be 69741. And I'll make my comments. Let me see. Any questions, guys? So let's move on. Now this trade setup is based off of this fractal level and this little bit of rejection here, a nice little rejection. Now we could drop a little farther. What's going to happen is I may change the take the entry level. So I may go back and edit that based off of, like, so tomorrow this is way down here. I may change that, or else I may take it off the table. But currently If this never goes any lower and comes and triggers us, that's our trade. All right. Now I may change it based off of if this market drops lower, I get a negative bounce off of Williams percent R negative 80. I may change my take profit, my entry level. So be careful of that, and don't. All right, guys. So now the next trade that we called out was the Aussie New Zealand dollar trade. This trade had an entry at 107.349 with a take profit at 108.097 and a stop loss at 106.645. All right. So let's go to the chart, look at where we were at that point and look at where we are now. And then we'll look at what we were talking about at that time. Give you a chance to see all of the dimensions of the trade before, during, and after. Well, some of these trades are current still. All right, so let's look at this. All right, guys, so we are looking at the Aussie New Zealand dollar. Basically, let's go back to the day that it was that we were talking about, was the 24th or whatever. So the 22nd, the market closed on Friday, and we opened up right here. So as the market closed, this was the candle that we had right here. This is pretty much a rejection candle, rejecting this zone that we trade. We had this zone set up, and this was where we were looking for our profit. I mean, not for our profit, but for our entry at this zone. So we used this candle because this candle was an indecision candle, and it showed good rejection. All right, and a rejection of the zone gives us a sign that the market may be moving higher. So we had our entry set at 107.349 with a stop loss at 106.645. All right, and then this was our take profit level based off of 1-to-1 market ratio. So what we did was a measured move for all of our targets, but that doesn't mean we were looking to take, we don't definitely want to take profit there if we don't have to. So let's look at this. So at first, the first day market closed, this was Monday. I think we got triggered on Monday, but we weren't a losing position throughout the whole Monday through Tuesday to 5 o'clock Tuesday. 5 o'clock Tuesday, we even dropped a little lower, and then we probably were pretty much like break even. So for 2 days, we got triggered early, and then 2 days we sat in a trade that didn't give us much. Now remember, I'm trading the daily time frame, so this is not scalping right at this point. This is a little bit longer term, call it swing trading. So like some of these trades are almost 2 weeks old now. And then you look at, we got into a losing position. Pretty much people were panicking here. I remember this. And we came very close to our stop loss. Look where this thing came down to. And look where our stop loss level was, 106.645. And you saw that I called that stop loss prior to even getting into the market. But we used it based off of our zone. We wanted a stop loss a little bit lower than our zone. Then people were panicking even more. Now I could have made a better entry here because we do a technique called walk in the zone. We could have had our entry at this point instead of way up here. We could have been in the market here, but actually it probably would have been hard because we got triggered the second day. Had we not got triggered and the market dropped even lower, first you got another candle where we could get an entry off of, but walking this zone, we would have been in the midpoint of the zone. So that's a technique that we do when we're trading levels, pretty much zones. All of our trades are based off of levels, but when we have a zone like that, we sometimes can walk it and get a better entry. All right. And then you could see it took us 1, 2, 3, 4, 5 days to get into profit. All right. So the 5th day we were profitable. For 4 days we were not profitable. People were panicking. But you got to let the market do what it's going to do. Then it got our take profit level. So a lot of traders got out at this point. Then you could see where we went to currently. So now we are rejecting a big level. And you could see this level lines up with some strong resistance points. All right, because you have a nice top over here, flat top here. And then this is where we're rejecting that level. So probably going to see the market drop a little bit. Not saying that the trend is over, but it might be, because what I'm looking at is span A is still pointing to the upside. That's a good sign. And span B is also. So the only problem is you got some thickness, a little bit of thickness. You don't want a thick cloud because that indicates pretty much volatility. All right. You want to see a thinner cloud that's angling to the upside, because that's what this is here. And then this is that volatile area where the market was a little bit flat. Not really, but it was trending a little bit. And you could see where it got thick here, and it was still trending to the upside though, but still a little thicker because of a little bit more volatility. Now we hit this level. Overall, this trade gave us about, just to our take profit level, would have been 98 pips. Where it is now is 121, and where it went to total was a good 168. So probably going to see this thing. You want to see what this candle does as it plays out, but it looks like a rejection candle, pretty much ending in almost 3 hours, a little less than 3 hours. If it does, you may want to put your stop loss all the way up here to see if you could get as much profit as possible, but maybe the market moves higher. All right. So hopefully it moves higher for us, but if not, we still make some good profit. All right, so let's take a look at what we talked about during that time, during our session, which was, I believe it was on the 24th, 25th again, I said. So take a look, you see what we were talking about. All right, so let's move on to the Aussie New Zealand dollar. Let me remove this. Now go with Ichimoku, you could see what we're looking at here. Now again, a lot of volatility right here. So have we reached the top? I need to see something, because I think we're at a top, but now we may be able to hit it again for, like, this is the double top. This would be a triple top. I think we could get another move higher still to this point again. So we could bounce off of this level. What we're really bouncing off of here, I needed to see that divergence, because to me, Williams percent R is not great with divergence, but it's showing it. But I wanted to make sure it was correct. So I'm going to remove this, and then I'm going to talk about this setup. We're getting ready to set up. I'm going to hide Ichimoku because we got another setup here that we want to look at. What is this setup? This is a fractal bounce setup. Now, this fractal was the level over here and pretty much still there. So I'm going to make this into a zone. Okay, so what I'm going to do is make this fractal into a zone based off of this bottom fractal. See this fractal? That's the other fractal. And it only goes to there if I didn't do it. But so I added this zone, made it there. So this whole area is a zone. I'm looking to bounce off of this. And I'm looking to trade up to this level. Now I think, let me make sure my target. I think we can attack this 108, 454, but I think you want to make sure you get through this 2 level. So I would like to have a first target level of 108.097, and I can change it as time goes. Be careful, because we have a very nice rejection, very nice possible entry. We may get a W formation down here, which may give us a better entry. So if this market drops lower and goes to the bottom of my zone, I'm going to change the entry. But right now I'm going to put the entry here, and I'm going to put the stop loss here, and I'm getting ready to put this back on the chart again. All right, so let's add this. I'm adding another trade alert. So it's going to be the Aussie New Zealand dollar, going to be entering at 107.349, right? 1.07 349, and we're going to be looking at take profit. I'm going to put it at 108.097 to start off with. Then I'm going to try to reach this level at 108.454, and I'm going to put my stop loss at this level, which is going to be 106.645. And then this is going to be and this is also another fractal bounce. And I'm going to publish that. All right. And I'm going to edit stuff, so this entry may change, but the trade is probably still staying on the table. So let's move through so we can mark all these. All right, guys, trade 3 of 5. This was the third trade, which is the Aussie USD. We were looking at entering the market at 65,764 with a take profit at 66,635 and a stop loss at 65,317. Okay, so let's look at what we were talking about. Well, no, actually, let me look at the market right now. We'll just look at the market where it is currently, what happened, and what we were talking about basically, and then I'll take you to the part of webinar where we talked about the Aussie USD trade. Now remember, we're looking at like 30 pairs, so we had 5 trades that day, which is pretty good, not too bad. And throughout the week, other trades progress. So starting off, we started off with 5 trades just to start the week, and then other trades progress, and then also other time frames. Okay, so we're looking at this Aussie USD. Let's go look at that real quick. All right, guys, so this is another trade that came down pretty much. We were looking at our zone. I don't know why this trading view is messing up, but this is our zone that we were looking at, and we were looking to trade at this zone. Again, the market went below the zone a little bit, but it didn't close below the zone. So this wick here is probably a good spot for your stop loss most of the time. But looking at our entry, pretty much our entry was 65,764, I believe it was. Yes. Okay, so that was the level right here. And then our stop loss was tight because we put it right up on this zone here. And it was going to be 65,316. All right. And then our take profit was right here, which was going to be 66,635. Now, let's see what the market is, where it is now. So what happened? We also could have had another better entry again. We could, instead of getting this entry, we could have moved down to this point. So we could have saved a little bit, cut a little bit more risk off of the market. And let's see where we are. So we didn't really get into a losing trade at all with this one because we weren't triggered on this day. So we talked about our entry here. We put our buy stop here, put our stop loss here. And the next day we never got triggered. We didn't get triggered yet, but then the second day after the call, we got triggered. And you could see the second day we went straight to our take profit level. Now, hopefully a lot of people didn't take profit right away, but let's see where the market went to. Okay, now see it pulled back again right to our entry level also. Again, like our first trade I talked about, you could see the market pulled right back to our entry level. I'm pretty sure most people got out of this trade. But again, you don't have to get out of trades like that. If you learn this market structure, what you can do is take half off the table or even, 2/3 off the table or something like that. And then let a third of your trade run, something like that. Split it up a little bit. But then the market got into a little indecision, then looked like it tried to move higher, and then it did move higher. And then it is where it is right now. So let's look at what the profit level is. So pretty much what entered the trade here. Take profit, first level was 85, but then total to where we are now, 307 and 317. So 2 trades right there already from the first trade and this trade here already gives you over 500 pip profit with those 2 trades. And actually we had, what we have here again? 3 something. And I'm sure we got out here, but for some that held, because there are some members that held, the first trade was about 4. This is 7. We're almost at 1,000 pips. We're already at 7 something. Add in the second trade, which was another 98 pips. You're pretty much at 800 pip profit total. But you're not going to get all that profit. You're not going to make every single pip profit that we're showing here. Some of these trades are still running. Some people are still on them, but you're not going to make every trade. You're not going to take every trade because some people got out here and some people let it run, okay? And some people got out way before they saw the rejection down here. Might even got out with a trade that gives you 300 and something pips profit to a possible less than 30 pip profit trade. All right, depending on how you manage that trade. So let's look at what we were talking about during the webinar. Let's look at what we talked about for the Aussie US dollar. All right, so I only talked about Aussie New Zealand. I didn't talk about this because, again, this Aussie US dollar is also giving us an opportunity. Now it's starting to get flat, but we're still bouncing on these levels. So I'm going to mark it. We're at a level right now. I'm going to put a stop loss at this level, slightly below. Now, I think this level right here is we're going to shoot for this level right here. Now, we could see a second level, which is going to be 1, 2, 3. Second level could be up to this point at 6, 7, 1, 2, 3. That could be our second level. I'm going to put the first level. If I edit a trade, I'll change it. I want to mark this entry level would be right there. First target will be 66,635. All right, so let's mark this one. Even if we drop a little lower, as long as we don't close below this, we're pretty good. And we want to enter at this level that I said above this high right here. So we're entering above the high. We don't want to see it close below the low. That way we stay bullish. All right, and we turn bullish. Okay, so that's what you're looking at on Aussie US dollar. So our fourth trade out of the 5 was the Swiss franc versus the yen. So let me show you what we were talking about, basically where we talked about entering anyway. Again, we had another buy stop. So 4 out of the 5 trades were buy trades, and the other one was a sell. So we went long 4 times. We went short once. We have our entry at 110,996. We have our take profit at 112,344. With our stop loss at 110,248. And again, we're not calling these like that day that the market triggers. We're calling these a day or two ahead of time, maybe sometime 4 or 5 days ahead of time. All right, because you understand that market structure, you kind of know where the market may come back to. Now, when it doesn't come back to your level, then it's just one that you don't get into, one trade you don't take or have the opportunity to lose or win, either way. But guys, look, let's go look at the market now, the Swiss franc yen now. All right, so that day, this is what we were faced with. Again, another big rejection candle at our zone. Our zone is really nice. We could have walked this zone again also. But see, this was Friday, so when we came back Sunday, this is how the market was prior to opening. We were already talking about this. Then the market opens up. So here we are Sunday talking about this. And this is why our sessions are so good, because we talk about the market before it opens and analyze everything and see if we got any trade setups prior to the market ever opening. Then as the market opened, our entry level was 110,996. You could see I think we got triggered that on the next day. I'm not sure. I don't remember. But anyway, you could see where the level was and what we were faced with. 2 indecision candles right at our zone was pretty strong for us to look for a trade to the upside. And then there you go. The market started moving to the upside. Our 1-to-1 ratio was big. So our take profit level was way up here at 112,344. The market came all the way back. You probably, hopefully people didn't get stopped out on this. This was tough, but we always know one thing, and I always teach you guys one thing. This may be our take profit level, but you always have to get through the 2 level. 2 should always be your first take profit level, because if it is, you're going to always pretty much be safe, because the 2 level is fluctuation with Ichimoku. Basically, the 2 is like when we're looking at an N wave. This will be the second leg. So 1, 2, 3, and then 4, which is an N wave. When you're talking about that, the 2 level is going to be fluctuation, and you could see what happened. The market was not able to get through this 2 level. If you can't get through the 2 level, you're not moving any higher. All right, and then the market dropped. Pretty much no need to really discuss this, but if somebody happened to stick into this trade, then you could see, again, the next day after that big drop, it went higher again. And I don't know if there was news on this day. I didn't check because I wasn't in the Swiss franc yen trade. And then the next day moves higher. And then we just missed our 1-to-1 ratio level. And then you could see next thing happens. Boom. So really, looking at this, our entry was right here. At least you get about 45 pips. If you let that run, because 45 is going to take you down to a negative 33, not even 45. But then if you were able to let that run, our first target level was going to be about 133 pips, but then overall 206. So guys, all of these trades, the first four trades, these first four trades are over 1,000 pip profits with these first four trades. And again, you're not catching every drop of this profit, but if you're looking at the pips, and they're still moving, these trades, some of these trades are still going, so they may even yield way more. So I even had a trader in our one of our members. He had 1,000 pip trade. He was in the trade, I think, for 2 weeks. I think maybe it was longer than that, but I'm gonna talk to him. I'm gonna let you guys see his mentality during those kinds of trades, because these kinds of trades pull back on you, and then you have to sit in there and watch it drop or go against you for such a time, and then the next thing you know, you're back to profit, then it's going against you, then you're back to profit, then you're going against you, and then it's moving higher or whatever. So you have to be able to fight that. A lot of psychology in these swing trades, believe it or not. So that's what we looked at. So let's see what we were talking about during our session, and then you could see how we made this call and everything we were talking about at that time. So let's go right there, look at these. This would be a zone, but I'm not going to make it into a zone because the candle's a little big, so it will make a bigger zone. It'd be a zone like this. Now for me, the trade is like this. That's my entry at the top of this level. And actually the zone is right there. So I would be looking to enter here. Let's mark this one. I want to put a stop. I want to put a stop loss at this level. All right. I want to put an entry. And see, I'm not going to zone walk this. And I could, because I could put an entry where we are with a stop loss here. I want to see more from this. I'm going to put an entry right here. And target, we need to get through there. I think the overall second target's going to be here, because this is support and resistance level. A nice resistance level might make a top. Not going to be a double top, just another top. But also we can look at our target as this. So we would go one from here. This trade would have made to the, we didn't quite make the 1-to-1 ratio trade there. But if we look at this trade, we're going from here to here to the bottom here, which would give us a target. Pretty much target is where we said, so I'm not going to even use this. All right, we don't need to put that. So this is going to be our overall target at 112.344. We're looking to enter long here at about 110.996. Stop loss is going to be 110.428. Let's mark that in the trade in the chat room. And I'll go back and edit all this stuff, but we want to just have it posted. So we're looking at Swiss franc yen. And this already marks it for me, so I'm going to use theirs. And I'm going to go with the entry level of 110.996. With a take profit level of 112.344. And a stop loss level of 110.428. And a comment of daily fractal bounce. So a daily bull fractal bounce trade opportunity. And it's going to be a buy and publish. So I marked that one in there. Now, some of these are not going to come to fruition. I'm going to edit them and change them. But you'll have them in there. You'll be able to look at them and see which ones are what. All right, guys. So our last trade out of the 5 trades was the New Zealand dollar CAD. Unbelievable. It's the only one that we went short on. And guess what? It's the only one we lost. All right. So this New Zealand dollar CAD was a entry at 85,191. And then take profit was 83,705 with a stop loss at 85784. We had a price resistance at price action with a bounce at that level. So let's go and look at the market. What we were talking about. Well, I'm going to show you what I'm talking about right now, and then I'm going to take you to what we were talking about prior to that entry. So we were looking at this one going short basically because we saw a nice rejection here. We saw this level was a level of resistance. You could see where I have this red line right here. So that was a level of resistance, and you could see how it held out here. It was a strong level of resistance where the market moved up to this level pretty much a couple times and then dropped. We also wanted to make note that we were on an angle to the upside, which was making this an ascending triangle pattern pretty much because you had your flat level here and then you were angling to the upside here. And then you could see we pretty much wanted to get down to what was our target. I think this was our target was, again, I forget. I think it was 85, 182, whatever. I can't remember. But I think overall we were looking to get down to this level here because we were looking at the market being flat and then we could get into this range level. And I think overall this was our target. But what happened to us was basically looking at this nice rejection here. We put our stop loss above that level. This was the day we were talking about. This candle had not developed yet. This was where we were. And then we talked about putting an entry at this point where you could see at 85,191. We got triggered right away the next day when the market opened. That next candle triggered us. And then look what happened. Went against us really big and then stopped us out. So there really is no need for me to talk about this at this point. I mean, basically, we thought this was going to be a good rejection off of this level because you could see how it was resistance. The market dropped. But it got squished up. It got pushed up tight. We're going to go back and look at this. But also, I just want you to be aware. Then what happened? The market goes our way. After coming all the way back, searching for us, stopped us out, and we're done. But where we are now, you could see the market trying to blow through this resistance level, and we'll see what happens. All right, so let's go back, look at what we were talking about at that time. Okay. So now we're looking at the New Zealand dollar CAD daily time frame. We're at a very good level. I think we may have an opportunity here. We're going to mark this in the chat room. Robert raising his hand. He's saying New Zealand dollar crosses are more interesting than most others. So let's find out. We're about to find out. But they sure are at a good level. So let's first start this with Ichimoku. You can see Ichimoku's flat. So now we're going to just look at the market. I don't want that. So if we're looking at the market, we got a very good level at 0.85, 529, and another good level at 0.83062. Our two main levels. Actually, I'm going to move this level right to there now. I'm going to 0.83705 for our bottom level. So you can see the zone. You see the zone? We bounced off of this top a bunch. We now are signaling short. I'm getting ready to post this in the chat room. This is going to be our entry right here. Stop loss is going to be above this level. All right. Short, and we're going to shoot for this level. So let's post this. And what I'm looking at is this flat top right here, this flat support and resistance level. The market's flat, so the market's now bouncing off of support and resistance. This is going to close on a daily time frame, probably below -20, signaling a short. We're going to take the price action entry. We're not waiting for this signal. The signal is indecision, close below the indecision candle. we take the entry. We're gonna, instead of closing, we're taking the level. So we want to enter the market at that point. If you're gonna wait for the close, then wait for this candle to close below this level. If it doesn't close below this level, you don't take the trade. But I'm suggesting taking the trade at this level when the market gets to that level. So now we're changing this. We're gonna mark this into the chat room. I'm gonna mark this. What symbol are we on? New Zealand dollar CAD, right? So New Zealand dollar CAD, our entry is at 0.85191. Our take profit is going to be 0.83705. Our stop loss is going to be 0.85784. And this is going to be a resistance bounce of a zone, of a range. What time frame? I'm going to mark the time frame, daily time frame, and publish. Oops, I gotta mark the sell. Sell stop, publish. All right, guys, so that's it. You saw we had 5 trades. We had 4 good trades, 1 bad trade. We look at pretty much 29 or 30, 32, 30 Forex pairs every Sunday in our webinar session. So that's a members only session. So becoming a member could help you, because you could see we just had some very good trades that would have definitely covered your, depending on how much profit, I mean, how many lots you were using, you would have definitely covered your membership fee to become a lifetime member at this point. But we're getting ready to cancel that lifetime membership and let it just be a regular 1-year membership. But you could see, just looking at these trade setups and talking about the market with you guys, and while you're in there, you're asking me questions. I answer any question that you ask me in there, and I try to help you to understand the market while we're in there, show you the trade setups, hope you understand the entries, how to get into the market. This all helps to move you ahead forward, give you a little confidence, and helps you to move quicker to where you want to be with your trading. So hopefully this stuff helps you out. Even you guys on YouTube just looking at this right now, hopefully it helps you guys out too. But members, I appreciate you, and YouTubers, I appreciate you guys too. So till next time, I'll be back again. Look out for my Ichimoku series, which is coming up shortly. You might see it in the next day or so. All right. Until then, guys, have a great one. God bless. So long.